I'm Dave Wilhelm. In this video, we discuss the ownership form of the Business 245 business plan. The ownership form considerations when we decide what type of ownership structure we want depends on how much control we want over the organization, what resources are needed, how easy it is to form, what liability we will have, taxes, and then for the owners themselves, how many owners are we comfortable with, and there are residential requirements for some ownership forms. Here's a continuum of the ownership forms from a sole proprietorship to a general partnership, a limited partnership, a limited liability company, an S corporation, and a C corporation. Now, the two major considerations are liability and taxation. Sole proprietor, general partnerships, and the general partners in a limited partnership all have unlimited liability. That is, if the business loses money, they are liable for it. Now, if you do want one of these forms of ownership, unlimited liability is a consideration, but one can purchase insurance for it. Limited liability is for the limited partners in a partnership, an LLC, an S corporation, and a C corporation. That was the liability discussion. As far as taxation, a C corporation is one in which we say has double taxation. It describes it well, but it is a bit of a misnomer in that the C corporation is its own legal entity, and it is taxed once at the C corporation level, and then once dividends are distributed to the owners, it is also taxed to the owners. The other ownership forms do not have double taxation. They have what we call flow-through taxation. It's only taxed at the individual level. For our purposes, sole proprietorship is not one of the ownership forms I want you to adopt, simply because there's nothing to it. It's pretty automatic, and I would like you to go through the exercise of the requirements for a general partnership, limited partnership, LLC, S Corp, or C Corp. An S Corp is first a C corporation with some extra paperwork so that it has flow-through taxation. A few other requirements are fewer than 100 shareholders or 100 shareholders, a single stock class, and at least 75% of the income has to be from operations, not investments. LLC also has some requirements. The ownership is more flexible than the S Corp, non-transferable ownership, limited life, and tax flexibility. There are some other ownership forms. There is a nonprofit corporation, which if you are considering some sort of charitable work, you may want to consider being a nonprofit corporation. There's a B benefit corporation, which is fairly new. There's an L3C, low profit limited liability company, a limited liability partnership, a professional association, a master limited partnership. Information on these is available on the internet, as well as all sorts of folks are happy to give you more details.